Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 2nd of April, which of course means that it is the reciprocal trade tariffs day. And ahead of the announcement, we've seen the euro dollar come back a little bit on headlines that the European Union is taking steps to protect itself from any tariff related uncertainty. Whatever that means, it has boosted the euro for now as it has climbed out of this short-term flag pattern or falling wedge pattern, whatever you want to call it, and it looks like it wants to head higher after breaking and holding the resistance at 108 area. Obviously, the breakout comes ahead of the announcement of tariffs, so let's see how the euro dollar will close today's session. If it can hold around current levels or push a little bit higher by the day's close, then that could potentially pave the way for a run towards the 110 handle, which is where I am expecting the euro dollar to head towards eventually anyway. But a lot of uncertainty is out there because of tariffs, and in the short term, we could well see some further weakness depending on those tariffs. So if we go back below 108, I think that would be short-term bearish. In that case, the 200-day moving average would come into focus at 107.30-ish. Next, below that, we have this shaded green region as the next key support area at 106.30. And then below that is the key support zone between 105 to 105.30. That to me is the most important support area to watch on the euro dollar in the event we see a sharp decline in the next couple of days. But my base case scenario is that price is consolidating and is breaking out to rise towards the 110 handle. But obviously a lot will now depend on those tariffs. And let's see what that will bring. Insofar as the global indices are concerned, we've seen a bit of a recovery from the earlier lows, with major indices in the US turning flat to slightly positive on the session. The European indices are mostly in the negative still, but well off their earlier lows. So sentiment has turned a little bit positive, but it comes ahead of the announcement of those tariffs. So volatility is the name of the game. Let's see how the markets will close today's session. We have seen a bit of a bullish reversal here from a purely technical point of view, in that the Nasdaq broke the prior low here at 19,115, but it failed to close there. That was on Monday. And instead, the market rallied to close back above that level, printing in the process a hammer-like candle on the daily time frame. And that reversal-looking candle was potentially confirmed yesterday when the market closed higher on the session. But the lower lows remain in place, and until that changes, we have to be very careful because the market can easily resume lower, as we have seen in the recent weeks. So key area to watch in terms of resistance is right here, where the market was trading at around when I recorded this video, between 19,400 to 19,520, the shaded gray area. Prior support, it could turn into resistance, as we have seen already earlier today. If we go above this area, then the next key zone to watch is this orange shaded area, where the underside of the broken long-term trend line that goes back to January of 2023, all the way here. The underside of that trend line converges with the short-term bearish trend and the 21-day exponential moving average. All of that is happening between 19,700 to 19,900 area, this zone right here. The index needs to clear that area for me to turn decisively bullish on this market again. For as long as this area holds, and given the current structure of lower lows and lower highs, the short-term path of least resistance remains to the downside. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.